All right. Now, today we'll be talking about market structure. Yes, market structure. It just simply means the way or the system in which this market move, the nature or the way or the style in which this market moves. And there are three ways basically it moves. Bullish, that is when it moves up. Bearish, when it moves down. And consolidation or sideways, when it's not moving up or it's not moving down. So when a market is bullish, we are consistently breaking the highs and respecting the lows. What I mean by respecting, we are not breaking below the lows. We are breaking above the highs. How? By closing above those highs. When I talk about highs, I'm talking about swing point. Remember, three candle pattern, swing point, three candle pattern, which is this. For instance, this is it. 1, 2, and 3. This lowest one here is a swing point. Then this swing high, 1, 2, and 3. This one here, swing high. Here, swing high, 1, 2, and 3. This one is very obvious. 1, 2, and 3. This middle one now, this is swing high. So when market breaks above it here and closes above with a candle body, look at this, very obvious. Once we break and close above, then we are bullish. Immediately as we close the candle body, this low, this swing low now is the swing low responsible for this break. It means that this swing low is what protected. So we are not expecting price to go below this low. You see, we're not expecting price to go below this low because this low is protected. So which now gives us what is called an order flow leg. Order flow leg is the place from the swing low up that breaks the candle body. But we are going to get to that. Just understand that for a bullish market, we break the highs and close the candle body, and the lows are not being broken through, like the lows are being respected. Now let's use a replay tool. Let me explain this better so that we're going to understand. All right. Now the replay tool is on. Let me put it on again. I don't know. Okay. So let's look at it. Let's use a replay tool. Yes. So from here, let me cut. Okay. Now let's assume that this where price is and we are watching a live price action. Good. Price has started moving. You see. Now from this point, this is a swing low. Once we broke above this high, or break above this high, I beg your pardon. This low is the one responsible for this price movement. Look, that closed above. So this low is protected. We are not expecting price to go below here. The same with this, but this one is the most recent. So after break of structure, we are bullish. All this move now, we are bullish, of which price later came down, and then we closed below this swing low with this candle body, which means we are bearish. Once we are bearish, this high is protected, of which we went up. Look, we wicked this high. We wicked this. It is not a break of structure, but this is a swing high. but we'll take note of this swing high because once price breaks above this swing high, then we have now turned to what? Bullish. Then price went down, creating a swing low. Remember, three candle pattern: one, two, and three. Then we close with the candle body up, which now makes us what? Bullish. Which means this low is being protected. I'm not expecting price to come below this low, or which price went up as expected, creating a swing low high. You see, we are still bullish. You see, price is not breaking below the swing low. It's respecting the lows. We just beat the low here, and then we continued. Once we break the candle body, this that breaks this swing high, this low is protected. We are still bullish. We are not expecting price to go below this low. You see, so that is just basically how it works. Now, this is it. This is it now. So we can say from here, let's go from here. Okay, let's go from here. Here we say yes. So this lower low, hmm? That's lower low. Then from here to here, this lower high. From here down here, this lower low. Hmm? That's lower low. This lower high. This higher low. Yeah. This one now is higher high. You see, this higher low, this higher high, higher low, higher high, higher low, higher high. You see, this is a low as well. Higher low, higher high, higher low. Sorry, that's not higher low. This lower low, lower low. Then here, higher high, lower low again. Here, higher high. So we see how the price is moving. From there, we now have from higher high here, we now have higher low, higher high. Yes, this kind of a sneaky low, not very clear. Higher low, lower high, lower low. So that is just it when it comes to identifying a bullish and a bearish market. For a bullish market, we are consistently breaking the highs and not breaking below the lows. For a bearish market, we are consistently breaking below the lows and not breaking above the highs. While for a consolidation, we are neither breaking above the highs and breaking below the lows, which means we are moving sideways. When I talk about breaking, I'm talking about a close with a candle body above a swing high for a bullish scenario or below a swing low for a bearish scenario. So from here, this lower low, then we went back up, this higher high, higher low, this also a higher high, higher low, higher high. Okay, let's mark it. This lower low, lower low, this higher high, this higher high. At this point, we are still bullish, so we are expecting that what price will still trend up. But the reason that will make us to be bearish rather is when we break below this swing low, of which we did, not with this candle, but with this one. Obviously, this one, which means once we break below this low, our target becomes this. You understand? Good. So at this point, we are bearish. Immediately as we break below this low, remember, this was the most recent. We didn't break, we wicked it. Our eyes now comes to this side, of which this other one now is one that broke it rather with a candle body, which now confirmed that we are what bearish. So from here, this becomes a what? Higher low. Higher low simply because we didn't go below this. I didn't mean go below this low, or I didn't mean price went below this low. Would have called it a lower low. But here, this higher low, this lower high. That's lower high. Then this lower low. We are bearish. You see. So from being bearish, once price breaks above here, then we have turned from what? Being bearish to being bullish. So this lower low. Yeah, it's not obvious. So let's still call here lower high, higher low. Once the third candle form, that's higher low. You see. So basically, that is just what market structure is in its basic term. So in the next video, we are going to progress to the next level of market structure. I hope this video helps. And if you have any question, always feel free to ask or even drop in the comment section. Thank you so much. Please like and subscribe to my YouTube channel. Click the notification bell to see when I upload new videos. Thank you so much. Thank you.